So, morning guys, welcome to another episode of NGMI Trades. Super quick video this morning. We are just over an hour out from September CPI. I can't stress this enough, this is a massive number. If you've been watching my videos since June, we are coming towards the culmination of our theory. In other words, the market, 2022, the sell-off we've seen is due to the tightening in financial conditions, i.e. interest rates rising and the QE tap being turned off. Now, the reason that we have tightened financial conditions is to fight inflation. So, if inflation has topped, which has been our theory now for the last few months, and it is rolling over, but it needs to be definitive. So, that's why an hour and a half's time is so important. If inflation has topped and has definitively rolled over, this will give room to the Fed to pivot. And what I mean by that is that they do not need to follow this aggressive interest rate stance, which has destroyed risk across the market. 2, coupled with the fact that economic data in the States and more so globally is getting worse and worse and worse, and we live in a very interconnected world now. It is absolutely insane to adopt an aggressive interest rate rising policy when the house is burning down around you. You simply can't do it. So, you can when inflation is roaring and going one way because you have to try and fight it. But if inflation has definitively topped, then you can change course. I want to caveat this last point because even if the Fed does not pivot immediately, the bond market will do the job for them. So watch 10-year bonds, watch the whole bond market, but watch 10-year bonds. If this September CPI print does what we think it will do, coupled with the fact that economic data is getting worse and worse and worse, the bond market will move. And it will move relatively quickly. So expect to see 10-year bonds, which are trading around 3.3% at the moment. They're going to start moving in the next few weeks. So expect that sub 3%, and before the end of the year, I would expect it sub 2.5%. Now, let's go to the slide in front of you immediately. Really quickly, as I say, I want to make this super brief. Expected today is 8.1%. That is what the surveyed results have come in. So this is the financial institutions. You've got analysts around the world looking at the data. Expected result is 8.1%. If we come in below 8.1%, risk is going to fly. If we come in with a 7 handle, i.e. 7.9, 7.8%, something like that, yeah, you can expect Bitcoin, which is trading at 22.4 now, to go to 24K. I'm absolutely assured of it, and then we take a check there, but it will fly. Equities will do the same. They're going to move higher aggressively. What you have to remember about trading, investing, is that there is a lot of sidelined money at the moment. There's a lot of sidelined money. People are trying to decide what to do, and this is why this number is so massive today. So below 8.1%, 8% will move. 7 handle will fly. If we come in at survey, 8.1%. I bought a lot of Bitcoin at 18.8K. That's we're now 20% up in 5-6 days. It's a very good return for Bitcoin. If we come in at 8.1%, I imagine from a crypto perspective, we will probably sell off a little bit, and then wait for FOMC. So I'll take some profit if we come in at 8.1%. I'll take a small amount of profit, and then see how we play out pre-FOMC, which is obviously massive next week. Above 8.1%, I am very clear on this. I will be clearing the decks. I've gone into this number positioned in a certain way and positioned aggressively. I've been buying a lot of equities. I'm long the S&P 500. I'm long lots of growth stocks, Palantir, Zoom, DraftKings, lots of stocks that have been heavily hit by this interest rate move, and if interest rate moves, they will rebound the fastest. Crypto, I'm fully invested now. I stuck everything I had left at 18.8K in. It's done very well. Now as I say, super clear. If we come in above 8.1%, I will cut my growth stocks, I will cut equities across the board in terms of indexes, and I will cut crypto. I'm long gold. That is long gold, short DXY, short the dollar. Almost the same play because the dollar and gold are so inversely correlated. Again, if inflation comes in above 8.1%, the dollar will rally, I will cut my position, and gold will sell off, I will cut my position. So there's no room for error in terms of what we see. I have a very set theory. I've had a very set theory now for a few months. If I'm wrong, I'm wrong. But with everything, strategy is absolutely key. Just make sure you know what you want to do. If you have risk on, I know exactly what I'm going to do depending on what comes in an hour and a half's time. And we go from there. Guys, look, good luck. I wanted to keep it really, really quick. It's been an incredibly exciting few months, and I think it's going to get even more exciting from here. I'm going to round off because I'm going to round off with my base case, which is a below 8.1% take. I'm hoping for a 7 handle. If we see a 7 handle, this is going to start the snowball effect that we will see all-time highs in equities before the end of the year. Crypto is going to do really well. I don't think all-time highs, but it's going to do really well. This will be the last leg up in risk before 2023, pretty desperate 2023. So I'm looking for one last hurrah where I can make some very good money before the end of the year and then clear the tables later on, clear the decks later on. But look, one step at a time. Let's get that inflation print in and see where we stand. Good luck all, guys. I'll speak to you in the next one.